Hello everyone, it's Tuesday at 2 o'clock with your two favorite people in real estate. Today is the 14th of October, so I'm just feeling it a little bit with the 6-year anniversary of my dad being gone. I can't believe it's 6 years. I'm improving Ben really quick. Figure out why this side of my hair stays so curly throughout the day and this one doesn't, but who knows? Hello, Benjamin.
Hello.
I can hear you. Good. Okay, so we're gonna get into a couple things today. We're gonna start with the market update for the week, because sometimes I forget that because we get going on a tangent of something else. And then Ben has some topics he wants to get into, and I'm sure with our conversation we'll run into other things that are important to us too. Hold on, let me put you over here. That makes better sense. Look at that lighting. So much better. Okay, so let's talk market for the week of October 13th. So in Pierce County, we're looking about $316 per square foot. That always ranges. So we're just looking at a county as a whole. This is just the big market. You want to go micro into your specific neighborhoods right now and really look at what's been happening in the next 30 days, as well as looking at what's happened over the last 90 days. Where are prices decreasing? Are they increasing? Because what you listed at today, if you're looking at statistics of what happened 30 days ago, it may be actually less or more than what had been in there. So average days on market. I'm gonna let you guess this, Ben. Take a guess.
68.
81
Woo-hoo!
days.
Buy
Yeah.
the dip. Buy the dip.
Yep. So 81 days on market. So if your house is sitting 90, 100 days, you may have missed the market. So there's some strategies for that, whether you want to take it off for 60 days and reignite that listing. Maybe you're not happy with your previous agent. There's some things about that. Or you need to do a price improvement or condition. That there's a lot of different things that you can take a look at it. You can change your marketing remarks, change your pictures, do some different things, but ultimately you're chasing the market down and you may have missed the market. So making sure that you are staying in front of what that looks like. Price decreased, same as it was a week or so ago, 49%. So 50% of the listings are decreasing. Whoop. We're still in a seller's market slightly in Pierce County, but I will tell you, most of Puyallup is a buyer's market right now. A lot of different areas are becoming a buyer's market. And what's crazy is you're not really hearing this on the news because 0 to 4 months or even 6 months inventory supply statistically 10, 14, 15 years ago, was still a seller's market. When you got to 6 months and above, you're really like 6 months is probably a dual market. So anywhere from like 4.5 to 6 was a dual market, and then anything above that was a buyer's market. But Housing Wire said because we've been in a severe seller's market for so many years, almost like the last 10 years, really anything over 2 months inventory supply really starts feeling like a buyer's market. And so the behavior of the consumer changes. And so we can't statistically go off of what worked 10 years ago in what that month inventory supply is. So if you're looking in an area and they have over 2 months, 2.5 months, like some like Chelan County, it's like 18 months inventory supply. It's crazy. You're really looking at a buyer's market. So really 0 to 2, I would say, is a seller's. 2 to 3 to 4, I would say, is a dual market. And then 4 and above is really a buyer's market, behavioral wise, of consumers right now. And so when you're really looking at that, you're at a 3.9 in Pierce County. So lots of different opportunities. So based on that information that I shared in Pierce County, what do you take from that, Ben? What are you hearing?
I heard you say missed the market. And the first question that comes to mind, being in the business for what, 25 years, is you said miss the market. As a seller, you put on, maybe you did miss the market, maybe you priced too high, maybe you didn't, maybe maybe you didn't fix this, and that's all relative. Where are the buyers? I mean, I know myself, I have a lot of pre-approvals and applications are coming in, and it gets me thinking, why, the question, why are the current buyers holding back from allowing the missed market of the sellers? So 88 days is a long time. It brings me back to investing into anything. You buy the dip. And when someone asks me, like, how, I wish I could have bought a house. Like, I see memes online all the time of what would you do if you went back to 2002 and it was, oh, I'd use my lunch money to buy a home. Ha ha ha. Well, I think in 10 plus years, in 20 years, we're going to be saying the same thing. And those who didn't buy in this time, they missed the market. So when you ask that question to me, I think about, are we as professionals doing a good enough job in understanding and educating our consumers on rent versus buy? Are we discussing the actual building equity opportunity, what it's looked like over the past 5 years, what it's looked like over the past 10 years? And you mentioned we can't do the same things just like we did 10 years ago. What does it look like moving forward in the future? If we go a worst case scenario, we're looking at a hold of 3 to 5 years to truly build equity versus, oh, you can build 6 months of equity right away. You're not going to find a flip or a home that has 50, 60, 100 grand equity that you can buy today, right? You may be able to find a home that you can get a really good price on and reduce your interest down over the next couple of years by trimming off the fat of your payment and putting yourself in a position to create a bunch of equity. But you may not be able to find a home, that has 100 grand in equity unless you know somebody, right? So I guess the question I've said a lot of questions, but I guess the biggest one is are we doing a good enough job relaying that education to the consumers? Because I think right now is a huge missed opportunity. If you're not buying or fully getting pre-approved today and understanding all of the facts of why it is important, you're going to look back and go, man, I wish I would have bought during that time. That was the time I should have bought.
Well, I look back over the time, like even being in the business 15 years this month, is I have clients like the Hattons that they bought their home $185,000 15 years ago. Long game, right? Not everyone usually stays in their home, but 10, 5, whatever. I mean, 5 should be the minimum unless you have a life-changing event, because you're going to have to ride the waves up and down. We're riding a wave down right now. But they ended up selling that for like 550. 550.
It's so good.
And they were able to take that $350,000 or whatever after expenses and go put that down on their next home, pay off debt, make an impact. And there's no way they would have been able to make that kind of money over, it was 12 years by the time they sold. Over time, you can't even save that much, even in an interest-bearing account. So there is just a lot of opportunity with that. I think what I'm hearing from buyers is that they feel like they can be picky because there's inventory on the market. I don't think they're understanding the long game of equity for, a short-term payment that extends them for the long-term gain. I think that people are a little scared of what does the economy look like with like food expenses and all that. So yes, maybe I can afford it today, but 6 months from now after Christmas, am I still going to be able to afford it? People are going to have to adjust their habits and their lifestyles in order to get into these homes now to build wealth for their future. And when you're not accustomed to those conversations in the way that you grew up, or, just general knowledge, if you're not introduced to it, it may take some time and hear it 6, 7, 8, 9 times for it to finally grasp and for you to understand what the potential is and what is the benefit and the tax write-offs and everything else of owning your own property. That's a lot. And so when I hear people, they get pre-approved and it's maybe less than what they thought because interest rates are a little bit higher, debt to income is different, people have more credit card expenses, and then they find out their payment, the two things don't necessarily make sense to a lot of people. They're getting pre-approved for $450, but their payment's $4,200 a month, right? Like they're just in shock because what they want to buy for that payment doesn't match up in their mind, right? Just like when we were younger, we were like, oh my God, what a $1 million house looked like. Well, $1 million house look now does not look like the $1 million homes I thought when I was little seeing
True.
them on TV. So we have to go through a period of them incubating all this process and information. My concern for that is that when is the best time to actually take action was a while ago, like you said. You don't know that you're in a recession until you're coming out of it. And that's where we're at. We are coming out of this recession, and there's a small window right now of opportunity that I would say you probably have 90 days, if maybe a little bit more, to take an opportunity as a buyer for closing costs, all that kind of concessions, because the unemployment rate's going up. That's reality right now. Even with the government shutdown, they can't deny the numbers, whether there's someone doing the report or not. The numbers are still happening. There's less jobs that were posted. Inflation is going down, which isn't good for them. They need it to be at 2%, so they're going to have to reignite the market somehow. And we haven't had unemployment rate up and inflation down since the 70s. So when those two numbers don't match, they got to get ahead of it. And they got to get ahead of it fast. And so when they start dropping rates and doing that on the consumer side of credit cards, they're going to start doing it for mortgages. And as soon as that turns on, you lost your opportunity. And now we're waiting for things that are out of our control. What you can control is your pre-approval amount.
Yep.
And your payment right now, and picking a house that you can live in for the next 5 years that is an investment. Put on your investor hat for your future. Now, if you're looking to sell and buy, you may not make as much as you want on that sell side. And if you haven't refinanced 20 billion times and pulled out a bunch of money, there's some opportunity there, and you're going to make up for it on the buy side right now. So you, as a move up or downsize buyer, this is the market for you. 100% is the market for you. And
Well,
I think
you said it. You said you're going to lose your opportunity.
Mm-hmm.
And the reality is the opportunity will change. Just like the advice we're all getting right now from our parents and the people that were during COVID, and which they bought their home, they waived financing and did a 22 AD, and they did all these crazy things and paid $50,000 more to secure that 2% interest rate, right? They're telling their kids and the current generation who's out looking at homes, that rate's too high. Just be patient, be picky. It's okay to not move forward yet. The rates will come back down, prices will come down. But the reality is they had an opportunity during that time, and the opportunity, you will lose that one in the next 3 to 6 months. There will be a different opportunity, and what we're talking about today may not be the same opportunity then. It may be you're going to overpay a little bit for a home, or you may pay more than, and you may have to waive everything and not have the security or be as picky, or we don't know what it looks like.
Well, and what I mean by the loss of your opportunity, the first time home buyers that are buying in this market could not buy during COVID.
Correct.
Unless you had cash. Most of our clients that we're working with right now are zero down, first-time home buyers that need closing costs.
Right.
That was not a market during COVID and low interest rates. People were having to bring 50, 60, 70, 100 plus thousand for low appraisal money, and that money's gone. That means that the home appraised at 450 and your offer is 550, you got to bring in that difference. That's the market that we were in. And if you don't have cash like that, you are going to miss this opportunity. You may not buy for another 5-10 years unless you start saving up for some of that. That's just the reality, because there's going to be a mix of both. And so right now it's that move up or downsize buyer and that first time home buyer. This is your market. It really is your market of opportunity.
Agreed, 100%. So with that said,
Okay, your turn.
some tips for first-time home buyers that are scared. Why and how and what does that look like? So the first thing I want to talk about is with the credit changes that are out there, because they're always improving credit systems. With the new programs that are out there, and I won't go too much into details of that, if you have credit challenges, it is super important to turn the light on, find out what is on your report and review it and figure out a way. Maybe it's negotiating debt. I have a client today that's approved for in that $400,000 mark, and we're doing a credit rescore, okay? If they pay X off, they owed about 4 or 5 grand. They negotiated down for under $1,000. Here's the thing. They saved 3 or 4 grand compared to what's on their credit. Now their score is going to jump up. We're in the rescore avenue, basically. Their score should jump up another 20 points, and they should approve for more and be able to go buy a home. That is a real resource that can happen. So if you're credit challenged at all, give us a call. Reach out to your current lender. Reach out to your real estate professional. Find out what can be done. Turn the light on and create a plan. That's the key. Communication and a plan is number 1. Number 2, the days of 20% down are gone. You do not need 20% down to buy a home. Those are gone. I don't know if they'll ever be back. There are so many down payment assistant programs in the market today. It is truly a first-time home buyer's dream. Now, the only thing that's not dreamy is that payment compared to what their expectations are. But, and I use but, and when we create a plan of exit strategy and putting you in a option of how to do this based on the current appreciation and what your tax breaks are and what that looks like long-term with the principal reduction and what you're building. With rents going up, sometimes they do go down, but they always go up, right? If you're renting a place right now and you try to renew your lease, they're going to try to hit you with a higher rent every time. Right?
Unless you sign like a 24-month lease, yes.
Which is fine. Yeah, and that does happen. But that extends also, you know, not buying and creating the wealth. Because I heard this, and I'm gonna say this, is you're always buying a home. As a consumer, you're always buying a home. You're either buying it for yourself and creating a nest egg, or you're buying it for someone else, because someone owns that property that you're paying rent on, and they made a decision to buy that and rent it out. That could have been you. So you're buying a home. Either you're going to get the benefits from it or you're just going to pay the fees of it. And that's your choice. Some of the other things I will say is understanding how appreciation in a home works, understanding your tax bracket and what that looks like and what write-offs you have, W-2, 1099. It doesn't matter what kind of income you make. Getting the proper team behind you that's a good CPA or someone that can help you understand it, so that you're not just using TikTok or you're not just using, you know, the internet to get your education. You can find
ChatGPT gives me the best education. Okay.
yeah, it's definitely better than a licensed CPA. So definitely reach out to the team and reach out and create that team, because understanding the true benefits between renting and buying with appreciation, tax breaks, principal reduction, the equity you're building, all these items of why people say, well, how can everyone afford to buy a home? You can't. You really can't not afford to buy a home, because we're in a weird time where, like you said, it could put this first-time home buyer market where you could afford it today in 5, 10, 15, 20 years, you just missed the opportunity and you can't buy. And you may be buying with multiple people.
Well, that happened. I mean, you look at the market in 2021, 22, and then now we're in 2024, 2025, and the end of 2023. That happened fast. That market, woof. Like if you bought in 2021, 22, the beginning of 23, you're probably not selling your home for a profit at this point. And, like that's just not happening right
Yep.
now. And
But
so,
you may have a higher interest rate because you bought it back then in the 6s or 5s or 7s, and maybe you've acquired some debt. And here's the next thing is, let's say you do buy that home today as a first-time home buyer, or you did buy, you don't have a ton of equity and you need to play the long game, but there's so much debt out there and everything is so expensive. How do you make it affordable? And the reality is you've got to turn the light on and do a mortgage review once a year and find out how can you leverage the asset that you bought, the equity you have built, and what options do you have to be able to maybe remove mortgage insurance. If there is enough value and the rates just haven't got low enough yet, maybe by doing a rate term refinance or changing into FHA versus conventional or whatever, you can remove just the mortgage insurance. Or maybe you can lower it based on your appraised value. Or maybe you can just lower your interest rate, right? Or maybe you can look at your combined rate in all of your debt and shave $200, $300, $400, $500 off your loan. I'm helping the client right now defer 2 payments. They're not saving very much a month, but because of some hardships, they're going to get 2 payment reliefs. And that 2 payment reliefs is night and day because of what we're facing, like a government shutdown. Who knows what's going to happen in 30 days with flights and so many other things that we're all kind of like, how is this going to go over the next little while? The best thing you can do is invest in yourself and real estate.
absolutely.
So I do have some other things to talk about, like bridge loans. So if you're one of those clients that's been on the market for 88 days and you want to go buy another home, right? There are bridge loan options. I'm going to release today our in-house bridge loan. I told you about it a while ago. Bridge loans are amazing, used correctly. They can be very expensive. Some of those that have done them knows that there's that convenience fee of anywhere from 1.5% to 3%. The issue is,
Pause for a second. We call it a convenience fee because you are not going to have to get your home show ready, you have people coming through it when you're living there. If you've got young kids or dogs or a lot of stuff or animals, anything that sounds like a mess of even trying to coordinate. Or I have a listing right now. We had a showing yesterday and they left the back door open and they have an indoor cat only. So if you don't want to deal with any of that and you want to take your time to move, find a house, not purchase it contingent, and move and then put your other home on the market, that's a big deal. So
yep,
that's why it's called a convenience fee, because that is the convenience of you using the program, which for some would pay $1 million for. Let me just be honest. So just putting that out there of why it's called a convenience fee, because it is the convenience of your life and your story of your expectations.
yep. And here is the amazingness that we have learned and why my company brought out a loan, a bridge loan that kind of takes away the pain of that convenience fee. Because convenience fees can, like I said, be anywhere from 1.5% to 3% of the purchase price or the sale price, which can be pretty hefty. We're talking $10,000+. Well, now the in-house program, it's not that expensive. I just ran one and compared, and it was $12,000 cheaper. It is based off just the loan amount now, not just the purchase price or the sales price, which is huge. And then you can couple it with a non-contingent offer and not have a payment for 90 days to, depending on how long it takes to sell the home. So there's a lot of great options with bridge loans if you've been turned down for a bridge loan, because we all as lenders use the same programs. There's Knock and Fly Homes, and I could name all 11 of them. Some companies don't even use all 11. Here's the reality. This one that we have is 10 times better than every one of them out there. You're not going to spend an arm and a leg to do that. You're not going to pay 2+ points on the sales price of your home. So if you've been approved for one and you just go, that's ugly, I don't want to spend 15, 20 grand to do that, call me, because it is not that expensive, and it shouldn't be, to be able to leverage your current home, to be able to, plus that allows you to be a little more aggressive with your realtor, so that if you have been on the market for 88 days and you can't drop price anymore because you need that extra 20 grand to pay for your bridge loan to be able to buy your next house, this will allow you to create some more room so that no one's taking that extra equity from you, and you can then be a little bit more aggressive in selling that property.
And some people just need to be out of their homes for them to sell. That just is part of it. I mean, some people live differently and what that looks like. You do have to have a certain amount of equity in your home, so it's not a, fits for everyone, but it's worth a conversation. What are your options? You want a toolbox of options. So that's what we're here to provide.
And we're a little more creative in-house because it's an in-house program. So we can now go ahead and make more decisions. So if you've been turned down, we've actually approved a few that were turned down by some major bridge loan competitors out there. And they're make sense loans. So give us a call. Call Nykole, call me. Let's figure out what we can do, especially if you're in that situation and been turned down. But again, if you're looking at that, turn on the light and see if it's an option for you.
Awesome. I wanted to bring up, we have our Trunk or Treat event in Puyallup on the 30th of October. I almost said November. That would be weird. And it is in our Puyallup parking lot. So if you are a Sphere, you're watching this video and you want more information on it, or a past client or anything, or have friends that want to come, reach out. We have been advertising on all of our social media platforms. So please RSVP if that's something that you want to do. General public is also invited. We just need to start getting a head count. And from there, also, we have our Save the Date pie event and client love event with Santa Claus. So if you are a past client or a VIP, you will be getting information on that as well.
Favorite events? Love that.
Yeah, back to back. Nothing in the beginning of the year and then just all at the end of the year. So
I can't wait to see all you guys.
yes, for sure. Well, that's all I have. Did you have anything else you wanted to add?
No, this is great information today. Just reach out if you have any questions, and let's find out what we can do for you.
Awesome. If you're seeing this video and you would love to share it, please do so. We love getting information, whether you want a private message to someone, a family friend, or someone that you may know, or even put it on your feed. That is a great way to help your friends and family grow their business as well. So
awesome.
Have a good one. Hug your loved ones today. That's my quote of the day.
Yes.
Bye.